Oh, very good afternoon. Good morning. Welcome to the new week, starting February the 9th, with myself, Giles Copland, and welcome to the Financial Source Sentiment Session. Good morning, TM. Good morning, Osho. Good to see you both. Hey, Mark, Najam, Stephen. Good to see you, folks. Hope everybody's doing well. Okay, what a turnaround we saw on Friday. So we're going to do a quick rundown. Remember, the whole purpose of these sessions, we want to understand what the fundamental bias is, want to find the daily sentiment, and focus how we can find short-term trading opportunities. Good morning, Suk, that are technically savvy. We want to use our brains here and avoid taking unnecessary risk when we'll have a good little case study with the euro pound long we were looking at from Friday. Just saw how we could take absolute minimal risk but maximize upside without being overly married to a macro narrative that can ebb and flow with, is it UK politics? Is it with moves with the dollar? We've had a couple of moves just over the weekend that leaves us vulnerable, right, to event risk. Yeah, we'll take a look at gold, Stephen. We're looking at a potential long on Friday, and we'll take a look at that. Okay, folks. So remember, when we're looking at market sentiment on a daily basis, the first thing we want to look at is what's the European opening news. Okay. The first thing we saw is Asia Pacific stocks rallying higher after last Friday's rally on Wall Street, with the Dow top the 50K level for the first time. So if you look at US stocks, the first thing to notice is we've seen this sharp rally. Technically, that's called a bullish engulfing bar. Bullish engulfing bar, bullish engulfing bar, bullish engulfing bar, bullish engulfing bar, false break Karami inside bar, and a piercing line pattern here in the FTSE 100. So all of this, right, is just pointing to further upside in stocks. So the general sentiment for today is buy the dip in stocks. Okay, so looking for high probability, low risk entries. And basically, if you look at this here, you see the way that the rejection has been from this support level. So if you just draw that support level, yes, you see you had a bullish engulfing bar from support. And that means we were looking for a bullish piercing line pattern. This is just the extension of a bullish piercing line pattern on Friday into a bullish engulfing bar. So what that means is this can be anticipated. Okay, so any dips you should find buyers. And there's no real major news coming out on Monday or Tuesday or Wednesday. So any dips, look for buying opportunities across the ES, NASDAQ, DAX, Euro stocks. Absolutely fine. Okay, that's the basic sentiment that we have. It's positive for stocks. Remember the story last week, investors are really concerned about a sharp sell-off in tech stocks. That deep dip found buyers. Apple managing to finish plus 7%. Nvidia only down 2.99% on the week. Microsoft only down 6.77%. Yes, it's still a little bit weaker. You can see in the tech sector over the last week for the um, major indices, but it's it's not as bad as it was. And the daily performance was a sharp turnaround. Right, it's tech stocks sharply turn around on Friday. The Dow and Nasdaq, right? So a lot of that is just on the expectation that extra capital expenditure should continue to support US companies moving forward, even if they're not as profitable. The investment isn't as profitable as markets thinking. There's still a lot of money swashing around for now. So that's a little bit of the relief. Um, So that's that. The Nikkei hit a fresh record high after PM Sonai Takichi's landslide election victory and supermajority. So her policies are seen to be very helpful for consumers. They should be lowering input costs. They should be increasing consumer demand. So you can see the Nikkei is just hitting all-time highs. And there's a couple of stocks that should benefit from that. Um, One is called, I think, Meiji Holdings. Meiji Holdings. Yeah, this is a US, a Japanese consumer company, and they produce things like food, nutrition, pharmaceuticals. So they got a strong seasonal pattern coming up from now to the end of March, right? And the standard deviation is quite low. So Meiji Holdings look quite good on this narrative. And there's also Cow Corporation, which is also quite good. And they are a lot of domestic products as well. They're things like personal care, health and hygiene. And they too have a decent seasonal pattern coming up, right? A little bit later, but that standard deviation is relatively low. So in other words, it's quite stable, these companies. So I think Meiji Holdings and Cow Corporation look reasonable for potential buying opportunities on this election news. So that's the other thing. Now, this is big news. China report urging banks to curb US Treasuries exposure amid market risk. So that should pressure the dollar further. Now, remember last week, we have been for the last few weeks, buying the dollar, and then when we hit that resistance, said, okay, I'm not so keen on buying the dollar anymore. And now we're seeing the dollar pull off, and that gave us that euro dollar upside bias from Friday. So that is still in play. And for those still long euro dollar, okay, we had that very low risk, high reward entry here. You can see that is now running up, what, 19 to 1 risk reward roughly. So that can be brought to break even. And then just take 50% off here if you haven't already. And then let's just see where we can go with that. Okay. But that remains absolutely fine. And an additional, right, long will be just through this. TM, good man. Good man. That's what I like to see. Right. Yeah, you're nicely in. Let's see, you got that trend line break here. You've got a nearly bullish engulfing bar. We're holding above this support. Can we get a bit further? Yeah, it wouldn't be unreasonable. So where was another decent area to get in? I would say another potential entry on this US Treasury story would be just around here. Circle, circle, circle. Is this zone here? Um, uh, I'd give that and try up to 3 or 4 times, right, in the euro dollar. So that's an additional entry there. Okay. Um, Now, the another little story about this Japan election is Takeshi has been saying that Takeshi is not going to be taking on extra debt to fund this new food tax cut. So that just means the yen might start finding some buyers coming in. And if you look at the reaction to the yen, I've now closed out all my dollar yen longs. Okay. You see the yen strengthening on the election result. It's not just the buy the rumor, sell the fact response. It's the fact that Takichi's not going to be taking on extra debt. See if it's here in the FX section. Um, Yeah, so JGB yields are climbing on the likelihood of future stimulus, but right, it's not seen that there's going to be a big pumping loads of debt into financial markets. Takichi's got an eye on the bond market, essentially. That's basically what it means. And she's not going to be doing something that's going to massively weaken the yen and force the Ministry of Finance to intervene, etc., etc. So just for now, I'm just okay. Dollar weakness, fine, but I'm just leaving the dollar yen alone now. So I've closed out my dollar yen longs. And for a decent result, let's just, for the sake of completion, finish that. So just one position was taken out from this, um, just at that under this level here. So the later position, I'd taken 50% off up at the highs, and then I took then the remaining remainder was just out there. And then this position here, the tiny little bit that I had left, I just took off this morning, right? So even there, that last bit was a 45 to 1 risk reward. Absolutely fantastic trade. And I took majority of it had already taken off anyway. So great trade, great sort of result on the dollar yen overall. Um, probably it's about 25 to risk reward, 30 to 1 risk reward overall on that dollar yen trade. We got two great opportunities. Um, let's just have a little look. Yeah, okay. Um, going through the mood, positive open on Friday's positive handover. So I think the market feels in a good mood this morning. The equity markets boost support for private investment. I do like the China 30, the Hang Seng. I'll just show you that in a minute. Just want to have a quick look, see what else. So weak dollar, euro dollar, pound dollar, dollar yen. Yeah. Okay, so that's really the main sentiment is weak dollar. If you look at the speakers for today, we've got Fed speakers, Waller, very influential, can move markets at 6:30, Miran Bostic. But apart from that, it's light on the data. So I'd expect that positive mood just to continue around. Looking into tomorrow, US retail sales, that'll be the main driver in the afternoon by the looks of it. And don't forget, we've got non-farm payrolls coming up on 11th. So the dollar's going to have a big driver, but for now, just further dollar weakness remains reasonable, and that's what I'd be looking at. Um, There is a bit of problems for the pounds with Keir Starmer facing a little bit of a confidence vote. Not literally a confidence vote, because Keir Starmer's got to win over his party. And if Keir Starmer looks like being replaced in the UK, that could put further pressure on the pound. Now, if you remember last Friday, one area we were looking at was just expecting the euro pound to start finding some dip buyers. Um, where is it? And we were looking at this area here. So I don't know if anyone's in at this region here, just down that 673. Anyone else? Did anyone get in on that on Friday? Anyone still in? Um, there is another potential entry here. So that's like a potential three inside bar up pattern. So this level here, so there's two things to look at. If you get a break and close over this tonight, that'll be called what's the three inside bar up pattern, which then means as long as you get a close above this level, then this remains a great entry level. Or you could enter at market with stops underneath this low and trail the stop.
At this moment in time,
right?
A little bit of further pressure makes up known across.
So just bear that in mind. And the broad
the European performance, we are dipping a touch as well. We do remain pretty much in the green across the board.
Just turn it off. The sentiment is positive for the euro pound because the euro is enduring some benefit from the weak dollar and the pound's pressured from political reasons and a slightly more dovish twist coming from the Bank of England in their last interest rate meeting. More were voting for board members were voting for a rate cut than most analysts expecting. So this just gave us that euro pound upside. So we're looking on Friday, a pullback to that area. Remember, we were saying, look, you had 4 or 5 point stop there and literally got pulled in perfectly, literally perfectly. The same here. You can try up to 3 times with a break of the 8722 5 point stop, right? Get 20 points up, move to break even. Ultimate target would probably be up at these highs around the 8800, 8820. Nice, Osho. And you see the beauty of that is you only had a 5 point stop, right? So very, very nice. And there's another entry possible here, okay, at market. Now, looking at gold, I tried getting into gold. I got stopped out for maximum times and then left it, right? You can see we're trying to get into that 4946 region, right? In, out, in, out, in, out, in, out, right? Which is a shame because the move actually ended up taking up nicely. That's fine. That's just the way it goes sometimes. Now, what I'm looking for here is still that same area is still the line in the sand, right? So what this would be now is we're looking for a long and a short position from this area, right? This is like a line in the sand. So you could try up to three times. Short underneath this area, okay, that's fine. Long above this area is fine as well. That's like your line in the sand, and you just want a little five, $6, $7 stop either side of that. Now we know we've got the weak dollar story, so that should support gold upside. So I think both opportunities, short and long, are acceptable. If you just look at gold, you can just see what a key kind of pivot area this is. Right, if we get up above that, then we've got a clear run up to the 5100, bouncing away. Otherwise, get underneath that, then we're starting to look at further downside. So that's my take for gold. Both long and shorts are fine. Staying above 4946 long, underneath 4946 short. But slight bias is for upside because of the dollar short story. Okay, I think that. Right, Lunar New Year tends to help gold in the run up to the Chinese New Year. So if you notice, gold tends to have a very strong period from the end of December into January, February. So as we're getting into the tail half of February, the seasonality for gold is still quite positive. But I think that's gold has been bid quite strongly over the last few years. Um, so you tend to see the most result for gold really comes in January to early Feb. That tends to be the China Lunar New Year purchases because often the purchases are made in anticipation of the Chinese Lunar New Year rather than around it, if that makes sense. So I'd say marginally there's still positive seasonal bias around gold, but not as strong as it was at the start of the year. That's my question, my sort of perspective. But remember, it's central bank buying. There's a lot of interest in gold right now. A lot of central banks buying it around the world. And especially if markets are looking to diversify and markets are concerned about high inflation around the world, then that all gives extra um, drivers for gold. So I think gold just has a number of factors pushing it. No, I think, yeah, I would basically say bottom line, you're expecting dip buys in gold. The only thing that makes it difficult for gold is the recent volatility we've seen, um, you know, with this kind of thing. You know what I mean? That's difficult to manage. And that's not that's not gold, that's silver, but it's the similar kind of story, right? This huge drop. So it's very volatile. So just keep the stops tight on in this kind of market. And I was I had a corporate client that got done by this, right? They were trying to short gold when they should have been buying it, and they ended up really damaging themselves. Yeah, RAM, it is factored into it. If you notice with gold, right, two of the best times of the year for gold. Look, see August, July, and January. So Indian wedding season, July and August, and Lunar New Year, December, January are very good months for gold. Ram, you're absolutely right. Um, Wedding season in India, good news for gold as well. And you see that summer months, again, it's factored into the seasonality as well. Thanks for drawing that attention to people. That's a very helpful seasonal pattern. Okay, so that's the story today, folks. So in summary, looking for high tight flag patterns, looking for retracement buying here. Look for an inside bar up pattern in the China 50. If this breaks above this level, you could buy at market stops underneath the low. Exactly the same for the euro pound. FTSE 100, that's a bullish piercing line pattern. So buy the dip in stocks today. Yeah, absolutely. So euro dollar, the two levels. So obviously down here, if we got back to the 11800 buy, and if we get to the 118,375 buy. 4 5 point stops, that's fine. It's just a natural swing point here in that gem. That's all it is. That'll be very intuitive to you. It's natural area, if you go down there, you're unlikely to just chop around. You like move, get underneath and carry on, move here, get up. So it's just a nice technical area. All right, folks, that is all for now. Do take care, and I look forward to seeing some of you folks later for the future session. Otherwise, take care. Have a great day. Bye for now. Cheers, GM.